Hi, everybody. Thank you for joining us today. We are going to talk about some dividend stocks that we like right now. And the one I'm going to talk about is one that I don't own yet, but is toward the top of my watch list. And here's a hint. I've said that Warren Buffett should buy this entire company several times. So before we dive in, take a minute, click subscribe to my channel, and check out the link you see on your screen, fool.com/Frankel, for the top 10 stocks to buy right now. It's a great way to support this work we're doing. Again, that link is fool.com/Frankel. So Tyler's joining me, and if you follow my channel, you could probably guess Tyler is going to talk about a stock that most of us haven't heard of yet, or at least a lot of us. I'm usually the more familiar of the two companies that we talk about, and that's the case today. So I'm going to kick it off. A stock that I don't own, but I probably will end up owning at some point in the not too distant future is Starbucks. I am absolutely a customer of Starbucks, and one of my favorite things about Starbucks' business model is one of my least favorite parts about Starbucks as a customer. I always spend more money than I plan on. I have two young children. I can't get away with going through the Starbucks drive-thru for a cup of coffee without buying each of them a cake pop. Or my daughter likes to pink drink. Or I always have to spend more because they've really leaned into the non-coffee part of the business. So to call Starbucks a coffee company really doesn't do it justice anymore. That's like saying all Coca-Cola makes are high sugar beverages these days.
I would say that I think at this point, in the last few times that I've visited Starbucks and just observed, I feel like they just make caffeinated milkshakes. Is that fair,
That's a
right?
lot of it. I feel weird when I walk into a Starbucks and order a coffee. Like, I feel kind of out of place. Like I'm the only one doing it. Um, I've actually gone to Starbucks at like 4 p.m. and they have to brew me a coffee fresh because they don't even keep any on hand that late in the day. Everyone just wants the cold stuff. Um, but anyway, so Starbucks, if you're not sure, if you don't know the scale of Starbucks yet, it has over 38,000 locations throughout the world. And it's not just about the stores. Starbucks is also the highest selling coffee brand in grocery stores. A lot of people don't realize that. Well, premium brand. I think like Folgers and those kind of things outsell it in grocery stores. But as far as premium coffee, it is the highest. There are 75 million active Starbucks Rewards members. And those are just people who have the loyalty program. There's millions of others. Um, but it's not really a saturated business yet. You might be surprised. Markets like mine, which are, I kind of live on the cusp of what I would call the suburbs in a rural area. And, Starbucks is just starting to creep out to where I live. New Starbucks just opened right near me a few weeks ago. And there are a lot of situations like that in the US and especially internationally in places like Latin America. India is a big target market for them. And China is obviously a big growth market for Starbucks. Um, they're a big beneficiary of what we call the mass affluent, where the middle class is really building up in different parts of the world. That's a big benefit for companies like Starbucks. It wasn't that long in the U.S. that people thought it was inconceivable to pay $5 for a cup of coffee. A lot of places around the world are where we thought about Starbucks 20 years ago. That's where they are today. So it's it's a big growth story around the world. The company has a plan to grow from 38,000 stores today to about 55,000 by the end of 2030. About 10% growth in the store count per year over at least the next 3 years. And the numbers really justify it. I mentioned they've been doing a great job of leaning into the non-coffee things, the food, getting people to spend more per visit. Comparable store sales are up by 8% year over year in 2023. That's not just inflation driven. That's people spending more, buying more products on each time they go in the store. Revenue was up 12% overall. A lot of that has to do with the new stores opening up. And they're doing a great job of efficiency. Earnings per share were up by 20%. They're expecting similar numbers in 2024, 15 to 20% earnings growth, 10 to 12% revenue growth. These are pretty good numbers for a company that we might think of as mature and saturated most of its market. That's not really the case. As far as dividends go, and then I'll stop talking about it. Starbucks initially started paying a dividend in 2010. They've raised it every year since then, including a 7.5% raise in September. Based on their target payout ratio and what they plan to do sales wise, the dividend could double in 5 years from now. They currently yield 2.6%, which I admit isn't the highest dividend stock. It's a lot higher than the S&P 500, which is why it's in a high dividend stock video. This dividend is growing fast and could get much bigger. The Starbucks, I'm actually surprised, is just over its 52-week low. Trades for about 21 times forward earnings, which is the cheapest it's been in a long time. So I'm a buyer of Starbucks stock, and I'm a buyer of Starbucks beverages. I like the company. I think it's very well run and has a very bright future ahead of it. Tyler, what are you looking at?
Well, before we go, what's your go-to Starbucks order? Mine's a short Pike Place, completely black.
That's what I should be drinking. My favorite Starbucks drink is a triple caramel macchiato. But what I've been doing lately,
Oh,
right? But what I've been doing lately, or my go-to drink is a tall flat white with an extra shot.
not bad. All right, so let's go from coffee, which gets which gets us going, and kind of keeps us awake at night, to what keeps the gas engine in our car awake at night. I'm going to go with Equinor. And for those of you who have maybe not heard of Equinor, it's used to be called Statoil. I don't know if that helps anyone either, but it is the uh, Norwegian integrated oil and gas company. Basically, they are about 60% owned by the Norwegian kind of sovereign wealth fund, that giant $1 trillion wealth fund that Norway set up because they had a lot of oil. Well, this is the company that extracts it. A vast majority of its business is producing oil in Norway, which, coincidentally just happens to be some of the most attractive rate of return oil in the world. In 2023, with oil prices somewhere in the $70 to $75 range for much of the year, and natural gas in Europe a little bit higher, Equinor had a 25% return on capital employed, which last time I checked is really, really good. If I can't think of a lot of companies over the past 10, 15 years that are cranking out 25% a year returns on capital employed. So it gives you an idea of kind of the level of profitability that we've been talking about. And 2023 was actually down from 2022 when it had 55% returns on capital, because your gas prices in Europe are considerably higher than they are in the United States, and Norway benefits from that immensely. So just to kind of give a perspective on what we're seeing from Norway in terms of oil production, their break-even cost, meaning like how much it costs to extract a barrel, pay up, overhead costs, and even pay a dividend, it's $25 a barrel. So if you think about where oil is today and what kind of level of profitability that is, that leaves a lot of cushion for oil prices to drop and for the company to not be in any sort of financial stress, and probably can pay its dividend for quite some time. On top of its oil business, which it's keeping relatively steady in terms of production over the next several years, it also has a very, very ambitious renewable energy program set in place, which by 2025 or 35, excuse me, they plan to generate more than 65 terawatt hours of power generation from offshore wind. And just to give an idea in comparison of where they are today to where that will be, that's a more than 50% annualized growth rate for its wind production over the next several years. And all things considered, 12 they're expecting like 12 to 16% returns on equity for its wind. Not as good as oil and gas, but still relatively good for the renewable space. So we have a highly profitable business, but at the same time, it's a business that is just, I, I can't think of any other word to describe than it has cash coming out its ears, and it doesn't know what to do with it. So Matt, if I were to ask you, a $80 billion company, how much cash on the books, like on the balance sheet, would really wow you? You're like, holy cow, why does it have that much cash?
Over 5 billion.
Equinor has 38 billion for an $80 billion company. This is a company it's been spewing cash so much, it doesn't really know what to do with it. It's been paying on top of a regular dividend, it's been paying a special dividend on top of it for the past 2 years that pretty much doubles its dividend, as well as over between 2023 2024, it's going to buy back about 12%, or sorry, 10 to 12 billion dollars worth of its stock. So we're talking more than 10% in 2 years. So we're talking about a incredibly ambitious shareholder return program over the past, next couple of years. It's a business that trades at 7 times current earnings, which, it's oil and gas. It's going to go up and down. So you can kind of expect it to not trade at a big premium. But even with its regular dividend and not including any of the special dividend payments, it's right now trading for, it has a dividend yield of 8.7%. On top of whatever you get in special dividends after the fact. So you have here what I think is one of the, I would say, grossly mispriced assets out there in terms of oil and gas production. If you look at a Shell or if you look at Chevron or ExxonMobil right now, I think their dividend yields are somewhere in the 3 to 4 range. So you're getting more than somewhere in like the double dividend yield for what is, I would say, arguably just as good of a business in terms of rate to return. And so if you're really looking for strong income play right now, Equinor really, really looks attractive to me. Oh, by the way, ticker symbol on Equinor is EQNR, because we don't want to forget that for the friends on the videos.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.